Okay, welcome back to Golden Rule Radio, February 15th. This is our weekly summation of the precious metals markets and the other markets that have an impact on the metals. And we're going to get right into those metals markets, starting with gold with Robert today.
Gold ran into resistance around the 1250 level, like we said, in the last 2 weeks. Pulled back to 1220, which, if our listeners recall, was the ceiling it had to break on its way up after it had pulled back into the 1180s. Also, we called that little pullback. We're now rising, and it needs to break back up above 1250 to have some legs to it.
Gold sitting at about 1220 is at a Fibonacci correction level, so if it does break below that, next spot down would be 1205, but it is holding above 1220 at this point.
So far, so good. Yeah, back up over 1230 today.
I think we have room to rise further in the A rise before we see a B decline.
Silver, the same, continues to outperform gold this year and continues that stair-step pattern up that we've been talking about for the last couple weeks. Silver did break the $18 mark and push back down a little bit. So we have strong support at $16.50 on silver, although I do think we're going to continue moving up in the short term.
So far, so good. Hi-O silver.
Platinum is back up over 1,000 and reached a 4-month high on February 9th. Sorry, Miles. That head and shoulders pattern you showed last week has been broken, with Palladium now trading equivalent to the previous highs.
Get easy. He was talking about his dandruff.
Oh,
all right.
Brush your shoulder off, Miles. that shoulder broke.
I've been calling him Mr. Right lately.
Hey, look, I don't mind being wrong on a pattern when the product still keeps moving up in price, so I'm okay with that.
No, the early identification of a pattern is what leads to profits.
Well, and with those patterns, we're just looking for entry points anyway, so frankly, I'm a little disappointed that I don't get the sooner opportunity to buy at a lower price. Although, with Elliott wave theory, I do think we might have a B decline still pending.
Yes, so if that shoulder has now turned into a bullish move, right? So it's breaking the head as we speak on Wednesday. Does that indicate that the A-rise has more room to rise? And then if we do see that B decline, as we expect, that means that the B decline would start from a higher level and therefore end at a higher level, correct? Would you say that's true?
Yeah, I'd agree. As long as we get above the current head on the pattern, then yeah, we're looking at much higher prices, and we'll have to reevaluate entry points at that time.
And Palladium is right at that head right before we came in here to record.
It's incredible the amount of pressure it's putting on that platinum-palladium ratio, too. That really is going to be fascinating to watch where we actually end up bottoming in that regard.
The real reason we talk about these patterns is exactly what Tori just said. We're always looking for those opportunities to take advantage of market moves, especially when you have market moves one metal compared to another.
Getting back to Dalio, in 2007, he predicted the U.S. housing bubble bust and warned the Bush administration major banks were about to collapse, and he was right. Then after the 2008 collapse, Dalio then predicted the Fed would print trillions of dollars to bail out the banks. He positioned money into gold and foreign currencies and made a fortune. Now, what is he saying?
I mean, he's got my favorite quote, too. If you don't own gold, you understand neither history nor economics. We're going to oftentimes take the micro approach from a charting or technical standpoint. But again, to continue to focus the listener on the macro, you have to understand that these are opportunities to focus on those underlying fundamentals and what's really going to move gold and silver over the long term.
So regarding those underlying fundamentals, Robert, how much is $1 trillion?
$1 trillion is a lot of money. And to put it in perspective, from Jesus's death, so 0 AD, you could lose $1 million per day till today, and you still wouldn't have $1 trillion.
And we're at 20.
So how does the government do 2 times that a year?
I have no idea. And that's the fundamental part of what we're talking about here, is that we are zoomed in on the daily action of the market on this show. But if you step back from these trees and you look at the forest, Dalio pointed out in October of 2016, so 4 months ago, he pointed out that there's way too much debt in the world. 4 months ago, global debt was at $152 trillion. Today, 4 months later, it's at $217 trillion. That's according to the Institute for International Finance. In 4 months, that total global debt has increased 65 trillion. Remember how much 1 trillion is?
So narrow this down, Robert. What is Dalio's recommendation then?
precious metals and real assets. He's basically saying get out of the system. And why? Because the banks are tied together through derivatives, and the debt is so enormous now that the collapse is just going to be that much more devastating.
So margin debt is at an all-time high right now.
It is.
And the cash to asset ratio in those mutual funds I mentioned is at 3%. So there's no cash available into the markets right now. In fact, this has only happened 3 other times in the last, 40 years?
And you really need to go listen to this week's McAlvany Weekly Commentary. They go into great detail on that subject, and it'll be very eye-opening. And listen, this is a Gold 101. This is why you buy gold. Debt, currency devaluation. All you need to do is watch those two things, and you will always be indicated to be owning more precious metals.
When everyone at the poker table's all in, no one can raise.
As for the U.S. stock market, Miles mentioned last week the Dow theory, and today we're seeing the Dow transportation average break to a new high, which provides confirmation that the primary trend, according to Dow theory, is bullish still.
So while we're on the other markets, I would stress as well, watch the bond market and gold prices actually together. Chris Flanagan, Bank of America, points out how rising bond yields and rising gold prices really do signal impending market volatility. We're seeing that 1973-74 bond market crash, the 1987 Black Monday, both were preceded by 3 consecutive quarters of rising bond yields and rising gold prices. And we are seeing the bond yields already hit 3 consecutive quarters of climbing from year over year. Gold is now following suit. Moving over to currencies, the U.S. wholesale inflation. Now we see the biggest monthly gain in 4 years, per the previous few weeks of our program. Just like we've been touching on, you're seeing much more hawkish news, hearing much more hawkish talk out of Janet Yellen at the central bank, listening to her testimony here the last couple of days.
Why is she running our monetary system, by the way?
Because she has been appointed by a previous administration and her days are short.
We do have quite a bit of turnover at the Fed coming this year.
The dollar index is back up over 100 and going to probably run into some resistance about 102.
So what we're seeing is gold and the dollar are rallying together. And to me, that takes us right into geopolitics. That's almost always an indication of political concerns or uncertainty. And the biggest news this week in that regard probably is the Flynn news that's driving some of that. But it's not just Flynn. I mean, you have a Russian plane buzzing a U.S. warship in the Black Sea. You have a Russian spy boat off the East Coast. So these are adding tensions, and we will see the metals react accordingly.
Maybe we'll have like Die Hard 7 come out where they bring Hans and the Russians back. Well, we'd certainly be remiss not to mention Yellen testifying before the Senate yesterday on Tuesday, today before Congress on Wednesday. So the pending March rate hike will follow the pending February rate hike, which followed the pending January rate hike, which followed the pending December rate hike.
That's right, but the odds have been increasing. March is now up to a 30% chance, but June's up to a 100% chance.
Does anyone think this is just ridiculous, that the markets are focused on this?
Well, the part that's ridiculous is that the markets are focused on this. Not what she's saying, but that the rest of us are sitting and listening to it like it matters.
And the other part that's ridiculous is that they're concerned about Trump increasing the debt, and yet for the previous 4 years under a Barack Obama administration, they sat there quietly saying nothing.
Well, and I want to know how much money they get paid on a monthly basis to sit there and say, we may do something in the future, but we're not doing anything now.
All right, so let's roll out here, guys. Robert, finalize our recommendations.
Silver, platinum, gold, US 20s, and generally speaking, if you're looking at adding to positions, which you should be buying on weakness, any weakness.
That's right, Robert, great points. Don't wait for the opportunity to pass you by. If you're waiting until somebody on the street like your auto mechanic is telling you to buy gold, you've missed it. Tori, Robert, and Miles, thank you for tuning into Golden Rule Radio this week again. Send us your questions. Make sure you follow us on Twitter at ICA Gold. Subscribe to us on YouTube by clicking on the subscribe button below. But most importantly, call us 1-800-525-9556. Let's run through your specific portfolio on an individual basis.